we're under the overall point of control. But if I was to take it from when we lose 9 cents and see where we are from the lower range, we're teetering just above it. You see that? Just above it. So we're in a very kind of decisive point in the charts right now when it comes to TRVL. And I think when it comes to how you approach this, there are different ways to look at this. You go all in now and just hold your breath, or do you have an actual trade plan that you're executing? And I don't think it's a good idea to just go all in and hold your breath ever. I think you have to have a trade plan, a plan of how to enter, when to enter, and how to exit when it comes to any kind of token or asset. You can't just hope for the best. I think the problem with the bull market is that it's so forgiving, because especially in the hysteria and the hype, you can enter wrongly or badly, and because of the hysteria your price still goes up. So you still make money, and you think that just because you made money that you executed correctly, but actually it's the forgiveness of a bull market will make you complacent, and then you can lose a lot more down the line. It's very important to have a plan, and I think with TRVL there's no different. You have to have a plan. Are you planning to trade this on an intraday basis, on a weekly basis, on a monthly basis, on a whatever basis? Or are you looking at a much greater time horizon, at a much farther distance? And I think that's important, because obviously I'm doing like almost daily commentary on the price, because it's a hobby. I love it. It just excites me. It's fun. I like to look at the chart on a daily basis, on an hourly basis, and try and figure out what's going on and try and decipher the future and try and predict the future. It's fun. But I'm not buying and selling as a result of what I'm seeing or thinking or imagining. Yeah, so... and I'm executing my trade plan. That's what I'm actually doing. And what if anything, I'm formulating a better trade plan, or I'm improving my trade plan, but I'm not reacting to the markets. The markets are very volatile. You can't behave that way, and you can't be so reactive. So it's better to have a plan. I think the best strategy for a very illiquid, relatively new token like TRVL with a massive growth opportunity, massive potential, the best way to approach this kind of token, which hasn't yet been launched on tier 1 exchanges, hasn't yet been publicized to the masses, hasn't yet been discovered by all of the crypto influencers and all of the larger players in the crypto field. I think the best way to approach this is to start scaling in small amounts on a regular basis, just dollar cost averaging in. And I think now is the moment to do that. I think it was a few months ago, but I think now, if you haven't started to do that, then now is the moment to do that. We can, if you start to scale in, then you're not really worried about exactly what price you entered. You're focused more on your position size and your bag size, and trying to build that position size as much as you can without pushing the price up too much. Because in a very liquid environment, you know, even $100 or $200 can move the price up 1% or 2 or a few percent. You know, that's the problem. There's a large gap. There's a large spread between bids and asks, between buyers and sellers, and sometimes it's a few percent, depending on how volatile or how liquid the market is. So it's not good to have that kind of approach. It's better to, on a regular basis, and I think now we're approaching the moment where you should think about dollar cost averaging in to this asset, to this token, as a matter of habit, as a matter of course. And eventually you will catch the lows, your position will catch the lows. And in a bull market, I mean, we're entering a bull market now. As the price goes up, it will go up in waves, however it goes up. As long as you're regularly, without fail, continuously doing the same action with the same amount, you'll end up with the best average. On average, you will end up with the best average. It won't even matter what the price is, you know, and that's always the best way. You scale in over a long period of time, and then you're not too stressed about the price fluctuating or being so volatile on a day-to-day basis. You're more kind of concerned about the longer time horizon, about the future of this project and where this project is going to lead. I think most people, when I say most, I mean literally most, I mean 99.9% of people should try to approach it like this. I mean, trading is very difficult, extremely difficult, and I think it's better in a bull market, it's better to just approach most tokens to scale in, dollar cost averaging. I think that is how I would approach it. I am approaching it, you know. I could trade, but no, I don't. I dollar cost average because it's just so much simpler and it's less stress, very stress free. I think when it comes to